Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome back to another brand new episode of WSI TV. I'm Jordan Bishop and this is Jim Sampson.
Hello.
Now before we get into the topic of today, make sure you go over to WSITV.com and sign up for the free access to the WSI Vault. You get free daily newsletters and a lot of other good stuff there as well. So let's jump into it here. We're looking at your auto profits from Trump tariffs here. Now, there's been a lot of talk by the bears lately. There's been tariffs placed on China and threats of more tariffs here. And more recently, there's been threats of tariffs on Mexico. So Jim, I'm just gonna ask you, these bears are screaming, tariffs were going down. Where are you right now, bull or bear?
Short term, bearish. And in the bigger picture, there's still foxish. We went to cash last October, we're still waiting for direction.
Exactly, yeah. So we've been out of all this volatility, we're sitting in cash. So Trump has threatened Mexico with 5% tariffs a month up until 25%. And it starts June 10th unless the flow of illegal immigration slows. Basically covering this just to show you what's really going on behind this market action. And investors right now are currently flocking to bonds. Now a good ETF, an exchange traded fund, something you can trade, is TLT. It's heading for an all-time high on heavy volume. Jim, what do you make of this action in TLT?
Yeah, extraordinary action in the last few days of last week as the overall stock market was sinking. You always expect a little bit of a movement into bonds, but this was almost like a high volume panic into the perceived safety of American treasuries.
Right. I mean, there's been a lot of other factors here pushing investors into bonds. Of course, the tariff was just one of them, but we also have the Fed playing around with the interest rates as well.
Yes, we've got a Fed meeting on the 18th, and the bet there, it seems by the overall market, is that they're going to raise, or stay.
Raise or stay.
Yeah, which is would be another explanation, I guess, for the bonds. Rising.
Yeah, exactly. And here's a chart of TLT here. Jim, you see that volume down there in the bottom right-hand corner? That is.
Yeah, that is really what caught my attention. It wasn't just a concerted rising in volume, but that dramatic spike upwards in pricing, almost acting like a kind of biotech stock that's just had a Fed FDA approval or something.
Yeah, I mean, have you ever seen bonds go up like that? It's just
I can't recall a time, but it seems excessive. Yeah, but the volume's there. There's big money rushing into the treasuries. Yeah. Right,
and one analogy we like to use is the RPMs of a car with the volume.
Right. So it's almost as if, imagine any, say in this case bonds or anything, it's like a car going up a hill, and when you look at these volume bars down here, that's almost like the gas pedals being pushed. So this really is this car's going up the hill on the back of some power.
Right. So some real movement there from bonds.
Buying.
Yeah. So just to outline this heavy volume here, the average daily volume for TLT is actually 8.3 million. Last Friday's volume was 18.9 million. So if it's not clear for you in the chart, there are the cold numbers there, almost double.
More than double of average daily volume. There's a rush going on, and it's a flag. And again, another reason why Fox, meaning that I'm just neutral in cash as a big picture point of view, frankly, since the end of last October.
Yeah, exactly. So what does this mean for the people watching? What does this overbought TLT volume mean?
Yeah, well, it's the sort of trade that we typically we home in on, because when too many people get on one side of the trade, it typically means that's an accident waiting to happen. When too many people are thinking the same thing, nobody's thinking. So you could short in the short term, you could short treasuries and short the TLT. Or there's another ETF which does the same thing for you, which is called TBT.
Right. Yep. So there it is. That's all you need to look at right now. We've got our eyes on bonds. Of course, we're still in cash here. Have been since October 22nd.
Yeah, and if the Fed meeting doesn't do what it's supposed to do, if they lower rates, that will indeed should burst the bubble in this dramatic rise in bonds.
Right, because it makes bonds less attractive. Because of course, bond traders are looking for that high yield, low interest rates, not bringing that.
Right,
so,
exactly.
So there you have it. Short TLT or buy TBT and watch the bond market closely. Jim, thank you so much for joining me. We'll talk to you next time.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.